My name's George. I'm the founder of Tide. This evening I've met a number of people who are Tide members, so I don't need to tell them what Tide does. But I've also met a number of people who are on Tide members, and also a number of people who I don't think knew what Tide did. Can I just ask you, if you are a Tide member, could you put your hand up? Oh, that's not bad, is it? That's not bad. Great. Well, look, we're really grateful that you're here. Thank you for coming. For those who don't know what Tide is, I'm not going to bore you all night long. I'll be very quick. Tide is a next-generation banking service for small businesses, which exists to make it easier to get back to doing things that you love doing. So we know that running a business involves a whole lot of admin that everyone hates having to endure. And Tide is all about automating away that admin. Not just the core admin of getting a current account that works, but also the admin of paying your suppliers overseas, or managing your staff expenses, or raising money to grow your business, or getting paid by your customers, and so on and so on and so on. So that's what Tide does. There's really good internet here, so you can always check out tide.co if you want a bit more information. But this evening is not about Tide. This evening is about doing what you love, which is what Tide cares about. It happens that there's quite a lot of people here this evening, and I'm certainly high on this list, who are really big fintech geeks. I personally love a bit of fintech. That's part of, at least, of why I created Tide. And we have the real privilege of being able to bring together this evening a whole load of other people who I think also could reasonably be described as fintech geeks. I know Sean won't object to that description. So the fintech geeks that we have who are going to talk to us this evening about what they see as the future of fintech are, well, first off, Sean is the founding partner at Anthemis, arguably the leading fintech VC in the world. We certainly think so, given that they invested in us. And Sean is going to talk us through some slides on his views about how fintech is evolving. Afterwards, there's going to be a panel discussion moderated by James Hurley from The Times, who's the enterprise editor there, also with Ed Ray, who was a co-founder of Betfair and is one of the most prolific fintech investors in London, and also Eileen Burbidge, who is a founding partner of Passion Capital, but she's also an advisor to the government on fintech issues, and I'm pleased to say she's also Tide's chairman. I think that's probably enough from me. There is one other thing I just want to register. I hope you all enjoyed the nibbles this evening. We were pleased to lay them on because, not just they taste nice, but also because they come from a Tide member. So our caterer this evening was Golly Gosh, and Johnny runs Golly Gosh. I don't think he's necessarily here, but if you go over to where it was all coming from this evening, if you do need catering for any event, please do have a chat with Johnny this evening, or Google for Golly Gosh catering, and I recommend it. It's good food. Okay, that's enough for me. I'm happy to hand over to Sean, who's going to give us his views on the future of fintech.
I have sort of 10, 12 minutes to talk about the future of fintech, which I can't do in 10 or 12 minutes. People that know me know that I probably can't do that in 3 or 4 days. I talk a lot. So what I thought I'd do, disclaimer up front. This is going to be very high level, maybe more food for thought than anything else, but I thought I'd maybe put some context around this thing called fintech, which people who know me also know, as George sort of alluded to. I don't like the term fintech. I prefer technology-enabled disruptive business models in financial services, but now you understand why that wasn't adopted widely and hashtag fintech was. So I'm going to talk to you about 3 very short stories. 2 numbers, and 1 possible future. Again, super high level. The 3 stories are this thing called fintech. We started Anthemis, or what became Anthemis, about 10 years ago. This thing called fintech is about 10 years old. Post-financial crisis, an opportunity to use technology to enable better business models and better businesses, better user experiences in fintech, in financial services. And I just want to talk about three companies three companies that sort of set the scene and certainly were foundational in our thinking about this market. One is called Weatherbill. Anyone heard of Weatherbill? Yeah, I tried to get Ed and Bert to invest in it and they didn't, but they were busy doing other great things. You might be a little bit more familiar with Climate Corp. They changed their name to Climate Corporation, and I was very privileged to lead the angel round in this company in 2005, 2006, and they sold to Monsanto for just shy of $1 billion in 2016. But why this is interesting is, at the time, it was just as I was leaving my old job, I was running some capital markets businesses at Dresdner Kleinware, and they essentially showed up, two ex-Googlers, David Friedberg and Suraj Khalik, who's now a partner at Atomico, with something that blew my mind, which was two guys, literally two guys and maybe a few more, but in a virtual garage had built an exotic derivatives origination, pricing, and settlement platform. They happened to do weather derivatives, but the architecture was exotic derivatives. And they had done this, like the demo on a shoestring, and even with the Angel Series A money, they did with millions of dollars what I knew my bank and other banks had taken literally hundreds of millions of dollars to build. And so, not only did I think this was super interesting, but it really catalyzed my thinking around there is something that is happening and is going to happen going forward. Technology is going to enable fantastic fundamental transformation in business models and economics and financial services. Okay. Second company I want to mention briefly is Simple. Has anyone heard of Simple? So it used to be called Bank Simple. Again, one of our earliest investments at Anthemis, I met the founder. He was a quant at a hedge fund in my old life, and so we'd known each other for a few years, and I remember vividly sitting in Columbus Circle in New York on a park bench, talking about his idea to build a bank that didn't suck. And it's an apocryphal story, but it's a real story. He had an account at Chase, I don't want to pick on Chase, but a big US bank, and was finding that the new terms and conditions kept getting smaller and smaller. He thought they were down to half, 0.5 font size, and thousands of words, and user experience that was just awful. So again, this was a company going back, but in the sort of the days of Tim O'Reilly's Web 2.0 user experience around retail banking. They subsequently were bought by BBVA Compass and are still operating and part of the BBVA family. But they are the ship that launched 1,000 other ships. Now there are literally hundreds of what are called meta banks or challenger banks around the world, and Simple, I think, was the inspiration for a lot of them. The last company I want to just mention briefly is a company that I think may be the single most successful startup in UK history, or at least recent history. Has anyone heard of Markit? That's more, usually when I talk, nobody's ever heard of Markit. It's now IHS Markit. I checked earlier today, it has almost an $18 billion market cap. It was started in 2003 in London. No venture capital investors, no angel investors. It was actually a consortium of banks. I was very fortunate to be one of those investors and sat on the board for the first few years. And again, was foundational in my thinking about how using technology to modernize a business. Their competitors are people like Bloomberg and Thomson Reuters, and in the space of 10, 12 years, they are now an incumbent. So, that was, again, it can be done. They went from nothing to being, now I think the risk that Lance has is being seen as, an incumbent and everything that sort of goes with that. Just briefly, two numbers, 56. So what's significant about this? Nothing really, but as I was preparing for this, I dug around in my inbox in my Google Drive, and I found a spreadsheet from 2008. When I started creating Anthemis, I put together a spreadsheet, literally an Excel spreadsheet that had, actually it was a number spreadsheet that had a list of all the startups I knew of in Western Europe and North America that were doing financial services. And, one version of it, the last one I could sort of find from that era, I had 56 companies in it. Now, I'm not suggesting it was completely canonical, that there were, it was every single startup in the world, but it was pretty close. I mean, that's what I was doing at that time, full time, to illustrate that they're really, this market sort of came from nothing. And then also at the same time yesterday, I checked on Crunchbase, and you can use CB Insights or PitchBook. All these data sources exist now that didn't then. And I used the FinTech and financial services tag. So again, I'm not, there might be some noise in this number, there might be some incumbents and all the rest of it, but I think directionally, 12,000 plus FinTech or financial services startups indexed in the Crunchbase database in 10 years. So the world has changed fundamentally. That creates opportunities, but it also creates risks. So to talk about, where we see the future, subject of a complete other talk, but our sort of foundational thesis is that we're moving from an industrial age, our economies and our societies that lasted about 200 years since the Industrial Revolution until late in the 20th century, beginning of this century, and now moving into an information age society and economy. And all the industries that we have, all the things that we need as humans and societies are transitioning their business models to that. As a follow-on to that, we believe one of the effects is that the optimal types of businesses and corporate structures, organizational structures are going to, this is a vast oversimplification, migrate from, tailoring top-down, vertically integrated businesses to networks and ecosystems of businesses. And, we're already starting to see that. That was very much theory 10 years ago. Now we're starting to see that. And the rise of APIs, not just in finance, but everywhere, I think is just one fairly concrete manifestation of that. That throws up lots of opportunities, so we're very excited. One of the questions we get asked the most often from our investors and our LPs is, okay, you guys had a great run, or this fintech industry had a great run, but, congratulations on being early, but, it's done, it's over. There's 12,000 companies, there's nothing to do. We absolutely don't think that's the case. It's different than when there was 50 companies. But the opportunities are still vast. Finance is one of the largest industries in the world. If you take a made-up Gartner or McKinsey type number, it's $5 trillion of revenues a year. But more importantly, and certainly for us and our mission, is that finance is the nervous system of our society. And if it doesn't work well, that shows in all aspects of society. And actually, working well is one thing, but it actually, we believe, should be invisible. It needs to go back to being invisible, a little bit like the nervous system is, but very present. So it's important that it work properly. And we think, as it transitions, it will again work properly in the years to come. Technology is a big driver, obviously, but also maybe a little bit more controversially or less obviously, we actually think regulation is an opportunity in this space. And I gave a talk, I think about 4 or 5 years ago at the first Wired Money conference, where I sort of put forward the idea of creating regulatory sandboxes and having an iterative, learn fast approach to regulation in a very constrained context. And I'm really excited to say, and the UK is at the vanguard of this with the FCA and their sandbox, but it's not only the UK, pretty much regulator after regulator across the world is taking this approach. And I think, regulation is fundamentally necessary, in my opinion, in finance, but it creates, it's actually, in the longer term, in the short term, it can be a barrier, it can be a pain in the ass for a startup, but when you're building from a green field, with the technologies and the business models we have today, it becomes much, much easier if you start with this to embed it into your business models, and then it can become a competitive mode. And then the last thing that's really positive, we think, going forward is behavioral change. This is not just unique to finance, but I think it's particularly acute in finance because finance is important to people. It's not surprising that the first big wins in the internet world were things like Amazon selling books. I think it was less of a leap to go, okay, I'll buy a book online instead of going to W.H. Smith. I'm not sure I want to do all my pensions online or my investments. Clearly, 20 years later, that's all changing. I remember once in the early noughties, somebody said to me, no one will ever buy a car online. Now most people buy cars online. Same thing in finance. It's now being adopted. And it's not just the millennials or Gen Y. It's our whole society is getting used to this. So again, it creates an opportunity for companies and businesses that are native to this environment and not trying to put lipstick on a pig in terms of their business model. But there are some challenges. One is competition, 12,000 companies, and then all the incumbents waking up and starting to do things in different ways. So it's a very competitive environment. The reverse of behavior is there still is finance is subject both from a regulatory and behavioral point of view to inertia, and so that can be hard to overcome. And I think one of the things that VCs, good VCs, often say is timing is important. You can be too early. Actually, that's one of the biggest risks when you're building a business as a founder or investing in one as a VC is being too early. And I think in finance that's particularly acute. So it's something that we focus on a lot is this the right time? And or capitalize the business sufficiently so that it can play out. Then the last thing, which I'll just touch on, which is a subject all to itself, is cybercrime, right? So, that in one sense it's new, but it's as old as finance itself. Crime, fraud, all of that is now translating itself also into this new economy and this new paradigm. The last, to just sort of conclude, yes, but, so yes, I think Anthemis thinks the opportunities are vast and continue to be and will be for some time, i.e. sometime being 10 or 20 years. This is a giant industry that needs to be rebuilt. But there are challenges in the nearer term, i.e. the next 2, 3, 4 years. I think you'll see, out of these 12,000 companies, more failures, not just in percentage terms, but proportionately, a lot of M&A. But these are all healthy things if you take a step back in the arc of history in terms of developing this new paradigm. So just before I conclude, two more things that I think are really important, but I'm not going to talk about it all. Maybe we'll have a chance in the panel with James Hurley, who's going to come up here and help us lead this panel. But is China. So William Gibson said the future is already here, it's just unevenly distributed. And in fintech, the future is in China. And financial is the largest fintech in the world. It's not listed yet, but I think you'd find it hard to get people to disagree that it's worth at least 60, 80, maybe more billions of dollars. And Tencent and their financial products. And not only are they leveraging the fact that China is an enormous market, but they really are leapfrogging. They are moving fast, they are innovating, and we look a lot for, there's no shame in sort of learning and copying some of the business models. Now you can't copy paste, some things are unique to China, but a lot of the things that they are doing are really cutting edge and they are winning. Just one point on that, and I won't name the firm, but a very, very senior head of global financial services for one of the most respected consulting firms. 6 years ago, we asked them who in their team was covering Alibaba and their financial business, and they didn't have anyone. And 3 years ago, they were sort of struggling to catch up, and sort of it came onto their radar screen. And then the last thing I had to finish with is blockchain. Topic of a whole other conference, a whole, thousands of conferences, but fundamentally, whatever you think of Bitcoin or Ethereum or the prices or the front page of the FT, this is very, very interesting and important infrastructure, not necessarily Bitcoin and Ethereum, maybe them, but maybe something else, that is being built. And if you think of past manias or rushes, literally the gold rush of the late 19th century in North America, or the internet bubble and telecommunications, which is actually, there was a lot more money lost and invested in the late 90s in telecommunications. This is laying the foundations of a new infrastructure that I fundamentally believe will be very, very important in the decades to come. So, a lot of people lost a lot of money investing in companies like Level 3 and WorldCom and others, but when they all went bankrupt, there was fiber in the ground. When the gold miners all lost their shirts in the late 19th century, there was railway networks all across the west of North America. I think something similar is happening and is going to happen in the financial world and actually in our economies, that the tracks of the future are being laid by the people innovating and building stuff in blockchain today. I'll finish there.
Now, Sean, just to start off with, we had a fascinating presentation there where you covered a lot of ground. I noticed that you didn't mention the B word in any of that, Brexit, and I don't want to spend too long talking about that, but you know, this is unavoidable in terms of the impact on fintech, isn't it? Or am I wrong and it's not going to have a big impact on British fintech firms? What do you think?
So, I'm probably the wrong person to ask because, as our esteemed Prime Minister said, I'm a citizen of nowhere. Canadian, I was educated in the US, I lived in France and the UK, and now I live in Switzerland. And really, without any irony or any view, the way that we look at the world is not through a nation-state lens. Even though we acknowledge that, especially in financial services, because of regulation, it's important. But maybe just to put a bow around that, I wonder how relevant, either way, good or bad, Brexit will be, because as long as we have nation states, and even in the context of the EU, there are national regulators that have remained very important. And I think, again, to my point on regulation with startups, I think it's probably an opportunity either way for startups. If you're running a giant bank or insurance company that's built all this infrastructure to deal with regulation as it is, you know, it's more disruptive, I think.
Eileen, what are your thoughts as both a government advisor but an investor in fintech businesses? Are you worried?
So I'm not worried, especially when you remind me I'm supposed to be talking on behalf of the government. But from I'm not actually going to answer with that point of view. From personally, and I guess taking all of the different roles into account, I do think Brexit is obviously a big distraction for the UK tech sector, whether it was fintech or otherwise. I do believe that actually the biggest risk, so I think there are sort of tactical concerns like passporting, like financial services and regulation. As Sean was mentioning, I think the biggest risk is talent. So if you've got, you know, the bigger banks leaving or sort of saying that they're going to set up their next 5,000 person office in Frankfurt instead of London, that's 5,000 talented individuals that we would like to hire and bring into the fintech ecosystem and into startups that won't be here in London locally. And of course, you know, we need to continue to attract the best talent. So I actually think that's the most material impact for us.
Absolutely. I was talking to a founder earlier who was saying that they'd given a job offer to a few international staff, and he was saying that, you know, sort of pre-Brexit it would have been sort of bite your hand off type territory, and now there's a lot of people having second thoughts. Ed, is that something that any of your portfolio companies working in this area have experienced?
First of all, I must say I love the way that Sean said, you know, I'm not a citizen of anywhere, maybe it's our Prime Minister. But look, I think it's a complete red herring. You know, if we in 20 years' time we'll look back, it will be seen as a small blip, a small dislocation. You know, we're all trying to completely change the way the industry moves, and this is a small, you know, single-year dislocation. It will have some impact. You know, bear in mind that a lot of the businesses that are regulated here are regulated on national regulation and don't already passport anyway. But then, massive opportunity, right? Because big banks suddenly have passporting, you know, they don't have it. So there's as much an opportunity as there is a threat. And I think we just have to sort of, you know, it's something that is there. Small companies generally, all the ones I'm involved in, are just taking it in their stride. And what irritates me is that we spend not your first question, but
I thought I'd get it out of the way.
Huge amount of time talking about it, and something I think in 2 years' time we're going to expense it all.
I very much hope you're right. Just one final question on this Brexit thing. We hear a lot of talk about this. London is, you know, is rightly sort of presented as a leader. But then we hear, and I think genuinely talk of Germany and France trying to woo our companies. Eileen, to what extent do you think they represent a serious threat to London's leading fintech, places like Paris and Berlin?
I mean, I think some people might choose to go, but I don't think it's a serious threat. I kind of agree with Ed in that the most resilient, obviously, and the best companies, the Chinese companies, are going to get on with it. I've sort of said before that I think in the United States suffers from this as well. If in Germany you had Frankfurt and Berlin and those two ecosystems, where Frankfurt is the center of the financial sector and services for Germany, and Berlin is where the heart of innovation is presently. If you had those in the same metropolitan area, it might be a bit of a risk. Or similarly, if you had in the United States, where New York and Silicon Valley are so far apart. Since that doesn't exist anywhere else in Europe, I think London is pretty safe in terms of leading in fintech.
Unless Berlin gets an airport and flight schedule that works at some point.
So take as long as we do to build airports and runways, we'll be safe.
Just to pick up on Ali's point, I said we don't look at things through a lens of a nation state, but I think when you're building businesses, it's actually urban areas. So I think you have to separate London and the UK. There might be London, Paris, Berlin, New York, Boston, the Bay Area, Los Angeles. It's not the United States or the UK, it's these centers, because it's talent. It's about attracting that talent. I think that's the biggest risk. If I worry about anything, and this is actually true of Antimus too, I don't know, I think we have 18 nationalities out of our 50-odd people. If there were to be a hard Brexit and all of the non-UK citizens had to leave, that would impact us and I think a lot of our portfolio companies. But we would figure that out.
I don't want to get into the politics of Brexit, but I think we're all...
No, let's definitely not do that. We don't have time.
Really extreme example, right? Brexit is not about that.
And
I'm absolutely confident that access to talent is really, really key. Don't think let's not make a joke about that. Politicians know that. I'm absolutely convinced that post whatever deal we get Brexit, we will still have access to the right talent. I think that's right.
So moving on from Brexit, in terms of the leading fintech companies at the moment, so the ones that have raised the most capital, probably springs to mind TransferWise, Funding Circle, companies that you've invested in. What, if anything, is stopping them becoming an absolute global giant that is based in the UK, not one that is acquired from overseas? Is anything stopping them, Eileen?
I don't think anything's stopping them. I think Ed would be better positioned, especially with respect to Funding Circle, but in terms of my point of view, no, nothing's stopping them. And I think they are global successes now. They are leaders in their categories, and so they're demonstrating that you can do that here in the UK, and there's nothing standing in their way. I don't know.
Funding Circle is already the single largest SME lender in the world. So your argument about...
In terms of net lender, do you mean?
Big lender called to SMEs.
Bigger than the Bank of China?
RBS is a bigger lender to SMEs than Funding Circles. Only in terms of net lending, maybe.
I don't know.
Definition of SMEs. So, I think there's anything stopping.
Right.
And again, I think we spend a lot of time particularly in this part of the world, sort of focusing on why we haven't achieved X, Y, Z. And in fact, rather than what we have achieved. And if you pick an arm of why do they sell out to SoftBank, it's very topical right now, because they're not going to back up whether they should or shouldn't have done it. It's still a great business. It was founded here, and most of it is still here. Who the shareholders are actually doesn't really change what the fundamental DNA of that business is. We need to get away from this who owns it now. So I don't think there's anything. I have to say, from a fintech point of view, there is no city in the world I would rather be based in. Regulation in terms of time zone, in terms of language, in terms of rule of law, all of those kind of things. Yes, we've got some headwinds coming, but I'd still rather be here than anywhere else. I think that's a key for us to do.
Yeah, that's why London has been for 200, 300 years, maybe longer, a financial center. The time zone is a big deal. And one of the things I love about investing in financial services companies is it's not a winner-take-all market. Even if you put aside startups, if you look at incumbents, even in concentrated markets like the UK in banking or France, people have market shares, like giant market shares are 10, 15, 20%. And these are very, very big businesses. So it's unlike, let's say, a Google or a Facebook where it is a winner-take-all and you have to, it's like one person takes everything and there's nothing for the rest of them. And ironically, coming back to my sort of the greenfield opportunity for startups like Funding Circle and others is they're in a much, much better position because of their fundamental business models to port this business model into new markets. And we're starting to see that with some of them. It's still early days. So I think there's a bigger chance, this might, I don't know, get me into hot water, but there's a much higher chance of a Funding Circle or their ilk becoming a global brand and having global success than an RBS or a Chase or a Citibank or even a Bank of China or ICBC.
So I think one of the things when you look at business like this is to do the sort of what I call blank piece of paper test. So try and forget everything you know about the industry as it is today. And go, right, if I'm designing from scratch with no knowledge at all, how would I design this? And if you would design it a different way to the way it is today, then absolutely that industry is ripe for disruption. And if you look at all of these new tech businesses, you're sort of thinking, well, actually, they're designing the way they should be designing. And the fact that we're talking about RBS is because we're sort of trying to, we've got an eye on the past rather than on the eye of how it should be. And the successful businesses are the ones that are sort of saying, right, forgetting everything I know, and I'm starting from scratch and I'm building it the way it should be.
These are still extremely large organisations, right? So how are they going to react? Are they going to try and acquire the likes of Tide? Tide becomes a big business. Are they going to try and buy Tide? Are they going to try and buy Funding Circle TransferWise? Do they try and do it from within their own organisation, which there'd be various problems with? What, you know, or do they just die eventually over the next 30 years? I think you used this phrase, Sean, didn't you, in that a video you made back in 2005, where you said something like your prediction was they'd become sort of just dumb, regulated pools of capital and little else. What happens now?
I think it's all of the above. I think many will rust away. So I don't think it'll be very spectacular. You know, there's always the possibility of exogenous market events like in 2008 taking out a Lehman or a Merrill Lynch. But I think the main failure mode for the ones that fail will be slow decline, rusting away. There will be ones that manage to transition both, I think, more through M&A, and you know, I'd say of the big sort of global Western banks, BBVA is probably at the vanguard of this. I think the jury's still out. They have a very aggressive and smart management team, but we'll see if they're successful. But they're certainly putting a bet on that, and they're building stuff internally and buying companies. And then there's others that will try to reinvent themselves from within. And on paper, that I don't think that's impossible. And indeed, at Anthem, as part of our business, is helping some of those institutions do that. But it's enormously challenging. I have enormous empathy for the leadership teams of these businesses, because it's not like it was 10 years ago where they're dinosaurs, they don't get it. There's always a few Forrest Gumps in the boardroom, but most of the people leading these large financial institutions, they get it. But it's like turning, a super tanker. Whether or not they can succeed, I think the jury is out.
Eileen, I just wanted to ask you where you thought the next sort of wave of innovation is going to come from in fintechs. We've seen, we've spoken about peer-to-peer lending and innovation there. Obviously, we've seen a lot of innovation around things like currency transfer. Where's the next wave going to come from? Is it insurance? Is it blockchain? Is it cybersecurity, as Sean mentioned in his presentation?
So I think it's definitely in those areas that you just mentioned, cybersecurity, insurance, and blockchain. But I think, investors like Ed and Sean, they will have been investing across the board for years and years and years. But I think it's true that the hype or a lot of the attention so far has been on services. So I would call those consumer services, even if they're to SMEs as their consumer or their customer. So they're lending, they're products that are being offered to a customer that could be a business or an individual. And I think what we're going to start seeing now is a lot more attention, in addition to sage investors like Sean and Ed, going into enterprise type financial services. So companies that are offering services to FS providers, if you will. So back in the plumbing, whether it's compliance, it's regulatory management, it's KYC, it's AML, it's actually down into the plumbing and behind, sort of underneath the surface of the water, and not actually trying to do customer acquisition, whether that's consumers or businesses. I think that's what's going to start getting a lot more funding now.
Ed, what are the kind of interesting decks that are crossing your desk at the moment and getting you excited?
I agree with what Simon said. I mean, to me, for example, Bitcoin is not blockchain. Blockchain is way more than that, and everyone's. I don't have a few Bitcoins, and also might like to have a few. But I think blockchain actually has applications way beyond that. So, for example, the friction of just financial services as a whole is huge. I happen to think that actually blockchain could be fantastically valuable in the whole sort of identity KYC space, which feeds into everything we do in financial services. So, but all of these things are, they're changing rapidly. I think insurance is another area. Again, I come back to my blank sheet of paper. I mean, I know insurance ain't correct. If I was thinking about insurance now, I would not design it the way it is today, which means, by my model, it has to be disruptive. And there are some very, very smart things happening in insurance now. And to me, that's the next big space.
Now you've mentioned Bitcoin, and as you said, Sean, you know, it's something we could have a whole nother session on. But I just want to, I felt like I couldn't avoid it, given I think we saw it go above $11,000 at one point today. How sort of worried do you think the fintech industry should be about the prospects of a crash, if indeed that's likely?
Yeah, I don't. Right now, today, I don't think it's very worrying because the wealth, whether it's real or paper, or disappears or remains, is very, very concentrated. I think if this continues to go on and you know, the dentist in Belgium or the doctor in Alabama starts losing their life savings, if there is a correction, that could be more problematic. But there's probably in the short term a benefit in that there's a lot of you know, potentially wealthy people. It got manifested in the ICO craze in the last year, but you know, there could be more finance. Again, coming back to my sort of creative destruction, that at a societal level, this is a good thing. At an individual level, it's really hard to tell right now. It is a mania, there is a bubble, but I don't say that, I don't think that's a bad thing. This is how creative destruction has happened in economies, at least since the dawn of the industrial era. So I wouldn't be particularly worried about it, you know, unless in a strange way, if it sort of continues in a slow climb and starts to infect the financial system. Even though the paper market cap of the blockchain world, it's essentially Bitcoin and Ethereum, or sort of 80% of it is $300 billion. I don't think there's a lot of leverage there, and as I said, I think it's, you know, our views is very concentrated in terms of wealth. So there's no systemic risk like we saw with, you know, mortgages and ABS in the, you know, that triggered the financial crisis. Leverage is what kills you. So one to watch is the CME future contract. So, and we've seen a couple pitch decks come across, I'm sure there's more, you know, where people are doing leverage lending against, and being an old derivatives guy and a banking guy is like, how do you write a haircutting model for, you know, doing leverage on crypto coins that are moving like 20% a day? But for now, I think it's, I think it's actually a good thing in terms of that creative destruction.
Eileen, what are your thoughts? Am I right in saying that Passion has an investment in a company called CoinDesk, right? That is an exchange for Bitcoin. So what are your thoughts on the current pricing that we're seeing and the rush towards Bitcoin that we've experienced?
Yeah, so we invested in CoinFloor, it's called, but it is, yes, the largest sterling Bitcoin marketplace. Our thesis there was we weren't necessarily banking on the increase or appreciation of Bitcoin, but simply the volatility and the fact that there would be a bunch of transactions and a lot of activity. We are a three-person firm, and so I was not the most bullish on Bitcoin to push through that investment. And I'm very much like Ed, I have an opinion on it. It's not something that I feel so confident into that I think, you know, we should have a third of our exposure or something to. I think, to Sean's point, the sort of impact and the ramifications, I think, are generally all very positive for the ecosystem. It's very sort of, you know, it's developmental and it's very informative, instructive in terms of what's happening and how things are going to evolve. Whether or not that means it's going to keep going up or that's going to be valuable commodity, that I would not even try to predict.
Ed, to your point around, you know, you said that blockchain is proving a bit of a distraction from the potential of blockchain technology, right? So what kind of areas do you think blockchain technology could create exciting fintech startups in?
Well, as I say, I think there's a huge opportunity in sort of identity and sort of verification for a whole load of those things. And if you get all kinds of fintech services, everyone in this room, one of the biggest frictions doing any kind of business is the very sort of old world style of KYC, AML, all this kind of stuff. So I think that kind of distributed ledger technology has a potential. I don't say that there isn't I think, you know, new currency has a huge potential. I mean, let's not lose sight of the fact that if you, as Sean says, you look at the quantum of Bitcoin as it is today in the global financial system, I mean, it's around, right? So it's still tiny. So actually, we're talking about 10,000. Why are we talking about 10,000? Why? Because it was 1,000 6 months ago. Not because 10,000 is any kind of proper number, but just because it's 10 times where it was 6 months ago. So yeah, we mustn't get sort of caught up with that. There is not a proper market yet. You can't short currency. You will be able to very shortly. So until you get proper market dynamics, we're not really quite know where it's at. So again, to me, I think it's getting a disproportionate amount of attention personally. I think the underlying technology is useful and very, very exciting. As I say, as a betting man, there is more than a 50% chance that the really valuable incarnation of that sort of, of blockchain is not good. That's what I think.
Sean, what are your thoughts? I mean, what fintech startups what sort of fintech startups do you see being created, and who's going to get disrupted by them using blockchain?
I think, coming back a little bit to Ali's point, one of the, oversimplification, we sort of divide the world up into what we call presentation layer companies. So this would be the consumer facing, whether it's an SME or consumer, middleware, but not in the classic sense, but this middle plumbing and deep infrastructure. And one of the areas we think is the most exciting right now, and probably for the next few years, is that sort of middleware. The deep infrastructure maybe too, but it's really not our game, because deep infrastructure isn't, you need to write big checks, and it's not business that we're in. And blockchain in particular in that sort of middleware, whether it's KYC, identification, self-sovereign identity, all these things are, the streamlining of finance is all about contract flows, right? And it's one of the things that got me excited about technology disrupting finance is the purest technology business. It's all zeros and ones. There's very little there's physical currency, and that's like a rounding error, even before the digital revolution was in the context of the global financial system. And so blockchain technologies, from that point of view, I think you can take any piece of infrastructure and try to rethink it. To Ed's, we use the same metaphor, the box of tools, like those old robot competitions. Here's a box of pieces. Given this box of pieces, and given this problem to solve, how would you do it today? And now with blockchain type, technologies, that tool set has just got very, very exciting. And so we spend a lot of time thinking about, okay, whether it's clearing or identity or any of the fundamental building blocks of finance, how would you rebuild that using these technologies?
Take an example. The most important document ever is carried by hospital. Why, when we turn up at the border, do I need to give a little book over to say, it's crazy, right? It's actually the most easily forged document. There should be somewhere in the cloud a distributed version of my identity. So it's therefore much, much easier.
There is, but it's
quicker. And I just
dark in the dark web.
when I turn up at the UK border, it doesn't allow me in.
That's why they're not making it.
We will look back in a relatively small period of time and laugh that we used to have to carry this little book, and we'd all get stressed from next time because we would just turn up and they will be able to find our record online.
Buying the terrible process involved in buying a house as well is an area that potentially blockchain could prove very useful, I imagine. And we're running quite short on time, so I wanted to see if there were any questions from the audience for the panel.
So I think you have to split the two. So there will be a trend for passive versus active, and I think that just goes up and down according to how active does, and active does well, and it goes to active, and has done relatively recently not done so well and feasibly to exhaust and different. But I think there will also then be platforms that will allow the service of both of those to be much cheaper and much lower friction. So I think you have to be careful to say that an automated platform will always only be passive, because I think we'll actually have both. Have active and passive forms, but you'll get much, much better services. I do think that the days of active management and the egregious fees that have been charged over the last sort of 10, 15 years, I think there's only a walk in that.
So, both in the interest of time and also not giving away all our secrets, I'll give you our high-level thesis on wealth management has sort of two components. One very much echoes Ed, which is, and at the risk of being a hammer that sees everything as a nail, I used to be a bond trader, it's a barbell. It's super efficient passive, and we've made bets on companies like Betterment in that space, and opening up, democratizing real true alpha. And that one I think is a little bit harder, like question mark as to who's going to win and how are they going to win. But what we call in the middle the death zone, which would be the traditional, sort of moderately high fee, index hugging, business is gone, I think, in 10 years. It'll rust away, it won't fall off a cliff, I don't think, but it's gone. And the other element of our thesis is what we call the family office for everyone in a pocket. So it's, again, democratization. So what was available 5 years ago only if you had $1 billion of assets is now available if you have 100 million. And hopefully, and our aspiration is that in some not too distant future, maybe 10 or 15 or 20 years, literally everyone will have that. I say in my part, maybe the form factor is no longer the phone, but in today's sense, on their phone, the same sort of level of automated will manage your financial life for you.
Great.
Short answer is that I think the winners will emerge and there'll be M&A. So there's unbundling to start. You start on one thing and then the winners will rebundle some of the services by buying great companies that are slower or smaller than they are.
I mean, I think that's right. I generally agree with that. And I just think actually the answer is that it depends for each different company. So for instance, I think the strategy for Tide, which Sean and I have both invested in, is very different than that of Monzo. And so I don't think it's not a cookie cutter solution. I agree there's going to be consolidation. I think a lot of what the neobanks or the challenger banks are probably leading with is just customer delight, which is valued by M&A acquirers in different ways for different segments. I also think many of the neo-challengers, especially Monzo, for example, is thinking very much in a marketplace sort of model. And so it would never want to compete directly with Funding Circle, for example, but it would look to offer those types of services through to its users or its customer base. So I think the answer is, it really depends.
Yeah, I mean, I think undoubtedly the spectrum is changing hugely. I think within the space, or like the concept of relative market share, so for me, if you apply me as a customer, how much of my wallet do you get versus how much the next provider gets versus how much the next provider gets is absolutely key. And so to me, I'd like to see people move away from a pure customer metrics number of customers, just say actually how many customers do I got there, I've got more than 90% of their wallet or whatever the number is, because that I think is something that's very important. But absolutely, I think, again, blank sheet of paper, you wouldn't design any of these industries the way they are right now, so they have to be disrupted.
Just one thing, I talked about M&A, but also I just wanted to highlight too, I think the world might look different. With SDKs and APIs, it might be confederations. They might actually not merge, but I'll sell your products, you sell mine. So I think it'll be a lot more complex and a lot more interesting.
Yeah, I mean, I think that's a great question, although I'm not sure it's necessarily tied to the marketplace model. I think there are challenges for any fintech company that's going to expand internationally. I would guess maybe your point about marketplace models, or Monzo specifically, might be if you establish an ecosystem or you have a set of partnerships in one territory, that doesn't immediately lend itself or scale to another territory, so you have to start from scratch. So that I guess, is true, and I agree with that. But I think, the first thing of, I think any of these challenger banks, whether it's Tandem, Starling, Atom, or Monzo, is they're trying to, demonstrate sort of proof of concept, worthiness within a home market, establish the marketplace and the interfaces, as well as the economics between those services they're going to be providing, and then look to replicate that in different markets with different types of partners under different regulatory regimes. But yes, time will tell whether or not that's scalable and how successful they are.
Fantastic. Thank you so much, Eileen. Thank you to all the panelists, and thank you also to Sean and Ed. I've just got to bring George back up on now for some closing words, and thank you to all of you guys too.
Thank you, James.
Wasn't that amazing? It's incredible to be able to listen to such expertise. I was thinking of, at the end, the questions about challenger banks, and at the start there was a question about Brexit. And it occurred to me this evening that if you look specifically at the challenger bank market, one thing that's striking is that if you think of in B2C, Monzo and Revolut, and you may not know this, but in B2B, Tide is now the fastest growing B2B fintech, new B2B fintech in the UK ever. We now account for about 9% of all new small business current accounts in the UK after 1 year. If you think about those things, it's striking that all of those three businesses that I've named are based in the UK. And obviously that's not going to change overnight, thank goodness. But I think that's not a coincidence. I think there is something special about this ecosystem and how receptive people here are to doing useful innovation in fintech. I don't know that if any of our businesses had been based in other countries, we would have had that early growth that we've seen. In Tide's case, we're going to find out next year, so it'll be interesting to see how we do it in other countries. And that's essentially because of people like you showing an interest in what we do. So I just wanted to say thank you all for coming this evening. It really has been an incredible talk. Thank you so much to our extraordinary panel. And finally, there's still food, there's still drink. Hopefully some of our panel will stick around as well to have a chat. So please do stick around and enjoy yourselves. Thank you very much.